I think higher credit scores have more leniency when it comes to underwriting right now. Really can be difficult to get an approval with a credit score under 660 on an investment property.
Hey guys, Sean Blomquist, Pine Financial Group, where we work together so you succeed. If you're watching this on YouTube, make sure to hit subscribe, hit that notification button so you're up to date on all the Friday videos we release each week. Today, we're going to talk about the state of the market and how interest rates are currently for conventional lending outside of the hard money lending that you hear from us. I wanted to bring in a conventional lender, and I've got Kim Burke with Luminate Home Loans with us. She's going to give you a little more insight on what the market is currently as far as interest rates. If you're buying a home for yourself, maybe you're buying a second home, buying an investment property, refinancing properties, things like that. I'll just give you a little more insight on that so you're aware of if any changes are coming up, any changes been made recently, and how that's going to affect you. So welcome, Kim.
Thanks, Sean. I'm Kim. I'm with Luminate Home Loans. I'm a loan officer here in the Twin Cities market. And just wanted to share a little bit with you guys about the state of the market. You know, now that we're coming out of COVID, we're starting to see some things change. There's a lot of hope that the eviction moratorium is going to go away, things like that, that'll ease our market a little bit. In regards to interest rates, we continue to see low rates, as many of you know, and hopefully refinanced or purchased last year. Your rate was probably in the twos, or real close to it on a 30-year fixed mortgage. We are a little bit closer to 3 right now, mostly under or between 3 and 3 1/4 on a 30-year fixed mortgage. 15 years, you'll still find those rates in the twos, which is nice. So still historically low rates. And I expect that we'll continue to see that. However, the big question is inflation and how that will affect interest rates if we do see inflation here in the coming months, which a lot of people are predicting we will due to our coming out of the COVID situation. We perhaps will see interest rates rise a little bit more. Most predictions say that they will stay probably close to or under 4 though into 2022. The big difference there though, I think, or the discrepancy would be in investment properties and second homes. And Sean's going to attach a link to this video that can tell you a little bit more about what's going on with interest rates on those types of properties. But in March, Fannie and Freddie both made an announcement that their portfolios exceeded their risk thresholds from an investor and second home standpoint. So they implemented an initiative to reduce the amount of investment property loans and second home loans that they were buying. And that drove up rates and costs. If you're looking for a quote on an investment property right now, you will find that you're getting a quote probably somewhere between 3.5 and 4 1/4 on a 30-year fixed mortgage with discount points most often. I did see for the first time yesterday what you would call like a par rate, where we actually were offering 4 1/4 at 0 discount points. Mostly we've been seeing lower interest rates with discount points, and that's because investors are trying to pool notes into one certain interest rate range to make it more attractive to Fannie and Freddie. So don't be surprised if your lender is telling you that they can't offer you a rate that doesn't include discount points with investment properties right now. But click on that link, read a little bit more about it. The Mortgage Reports blog does a great job of explaining that in pretty clear terms. And the hope, of course, is that at some point here, Fannie and Freddie will feel like their portfolios have rebalanced and we'll see those interest rates come a little bit more into market than they are currently. That's about all I've got though on interest rates. If you guys have questions, feel free to reach out to me. The best way to catch me is by email at kim.burke@goluminate.com.
Hey, Kim, quick question for you, just in case people are not in the business like we are and don't understand. What is a discount point?
Yeah, discount point is like an additional fee. So if you think about it this way, today's interest rate is 3%. You can pay extra for a lower interest rate. So
Gotcha.
if you wanted a rate of 2.5%, perhaps you would pay 1 or 2 discount points. You're discounting the interest rate by paying those points.
Gotcha.
And that's really, a calculation we would work out together to make sure your expense of the discount points is offset.
Sure. Sure. So are you seeing any kind of changes as far as underwriting goes for people that are maybe buying investment properties or refinancing, if they're doing the BRRRR strategy or anything like that? Has the underwriting tightened up at all, or is it still pretty much straight across the board like it's been, or?
I am seeing a little bit more flexibility in debt to income ratios.
Okay.
For quite some time there, we were capped at 45. I mean, we couldn't even be at 45.01. We could not get an approval. And recently I've been getting approvals with a debt to income ratio up to 49.
Okay.
So definitely a lot more flexibility in that regard. I think higher credit scores have more leniency when it comes to underwriting right now. Really can be difficult to get an approval with a credit score under 660 on an investment property. And you'll most certainly pay for a lower credit score in your interest rate. Interest rates are really highly sensitive to credit score right now.
Perfect. Perfect. Okay. Well, that's a great update on where we're at with interest rates in the market currently. And like Kim said, keep an eye on things. They might be going up a little bit, but as you all know, the interest rates are historically low right now. And even though they've gone up a little bit, they're still ridiculously low in terms of time and where things have been at. So if you're thinking about buying investment properties, maybe a second home or maybe a home for yourself to own or occupy, certainly reach out to Kim. Like she said, she's with Luminate Home Loans. If you're looking at buying an investment property, maybe to do the buy, rehab, rent, refinance strategy, reach out to both myself, Sean at pinefinancialgroup.com, and Kim with Luminate Home Loans. She does the refinances to take out our loans and get you into those long 30-year fixed rates as low as they are. So thank you for joining us. Be sure to keep an eye out for our next Friday video. And I just want to thank Kim for making this video with us. Thanks, Kim.
Thanks, Sean. I appreciate it.
Have a good day, everyone.